Hello, I'm David Jones and I'm doing this video with Trading 212. I thought for this one we'd have a look at the idea behind short selling. Now short selling is where you profit if you think a market's going to fall. And while it's a straightforward thing to do, as you'll see in a second, because we'll place a trade designed to try and profit from a market falling. Understandably, for a lot of people, it takes maybe a little bit getting your head around the idea of how short selling works. So traditionally, if you come from an investment background, if we just draw on this piece of paper, what we normally do is something like this. We see a market that's going up. So we think, well, actually, this, whether it's a share, an index, a currency, whatever it is, we think, well, actually, this is maybe going to carry on going higher. So I'm going to buy. And then hopefully the market carries on and it gets to a point where you think, actually, this may have gone far enough. So I'm going to sell and take my profits. So I think that's something that the vast majority of us are familiar with in markets. The idea of buying low and selling higher, hopefully for a profit. Short selling, it's very similar to that, but clearly if we have a market that's sliding and we think it's going to slide further, we don't want to buy, because what's the point of buying if the market's just going to get cheaper? So with short selling, again, if I go back to scribbling on my piece of paper, if the market is sort of sliding lower, with short selling, what we do when we open the trade, we sell first. And I think this is the concept that has some people in the beginning maybe tying their brain in knots. The idea of selling something you don't own with a view to buying it back later on. But that's exactly what short selling is. So as the market moves lower and lower, we've sold short here and it gets to a position where we think, actually, the market has gone far enough. And our profit, the same way, if we're buying first, our profit is the difference between our buy price and where we sell. If we're short selling, it's the same sort of process. Where we opened the trade by selling first and where we close the trade, that determines our profit or loss. So I think it's important to understand a couple of things before we go on and place the trade. If markets are sliding, you can profit for them by using short selling. And short selling, whilst on the face of it, it might look a little bit complicated, it's really the same as buying and selling, but the process reversed. But anyway, let's take a look at the trading platform and we'll place a trade designed to profit if the market falls. We'll start off by looking at, I think let's do gold for a change. We'll bring up the price of gold. So here's our gold chart. So we've seen something of a strong run in the price of gold in recent weeks as the world has become maybe a little bit nervous, a little bit uncertain, and the dollar's weakened. So it's all helped to push the gold price up. But let's say we're of the opinion, well, maybe in the short term, the price of gold has gone too far. Now we don't have a position open in gold. The only position we have is an older position on the euro down there. But let's say we're going to take the view the price of gold is due to fall from here. How do we profit? We profit from short selling, from selling first in the expectation we can buy back cheaper, lower later on. So to set up our trade, we'll open up the detailed trade box. So we'll click on there. Enter quantity. We'll do 8 in gold. Or maybe let's make it a nice round number. Let's make it 10. Let's scroll down. And what I'm going to do, here's the two-way price for gold. Like all markets, there's a price you sell at and there's a price you buy at. So at the moment, it's 1203.5 to sell, 1203.87 to buy. So that's $1,200 an ounce. So we're going to take the view the price of gold is going to drop. So if I think the price of gold is going to drop, I'm not going to buy, am I? I'm going to click on sell. So let's click on sell. Once that's done, and the trade is opened, that's it. We're short gold. So we're now positioned to make a profit if the price of gold drops from where we open the position. So you can see it down here in my positions window. Quantity 10, sold at $1203.53 an ounce. The market's currently just below, it's just ticked over 1204. So my profit, I'm currently down around €5 on the trade because the market's gone up. The market's higher than where I sold it at. Like other trades, you can place a stop loss, you can place a take profit order. Obviously with a stop loss, when you're short selling, this will go above the price you opened the position at. But hopefully this demonstrates it's just as easy to try and profit from markets that are sliding as it is trying to profit from markets that are rising. And you do that via short selling. I think it's one of these things that it makes a lot more sense when you actually do it yourself. So if you have a real account or you have a demo account and you've never done it before, just try it out. Do it small. Obviously, don't take on ridiculous levels of risk, but do a small trade selling something short so you can get a feel for how these things work. So that's it for this video. So we'll wrap things up there. If you'd like to see any other subjects covered, please leave details in the comments. But for me, David Jones, and from Trading 212, that's our quick explanation of how short selling works.